The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday the 15th, halfway through the month. And what a month it's been. So far, 2 weeks, seeing a whole bunch of things happen. And even more important than happening, it's what's going on right now. For instance, look at Goldman Sachs. Goldman Sachs had good earnings, evidently. And then there was a conference call, and suddenly it went from 540.51 all-time high to minus 1.66 right now at 520.92. That's interesting. Whereas Bank of America, well, the day's young. Bank of America has also pulled back from its intraday high. And let me just double check here to see, did that make a double top there? 42.17, 42.18. Yep, that's a C. So that's a continuation pattern. And Bank of America is up 61 at 42.53. A nice recovery high from a couple of months ago. And so far acting very well. It looks to me like this is the kind of mixed market we've got here, because you can see that you've got an NVIDIA screaming to the upside yesterday to an all-time high, nominal new high. 140.76 was the high back on the 4th of June, the week of the 4th of June. And yesterday, wait a minute, didn't miss it. You missed it by a fraction. Let's have a look right here. 140, this is not showing. There it is. Now, wait a minute. Where are my numbers? Uh-oh. Oh, I don't know. Okay, I haven't got that. So let me just double check. Why? There it is. Okay. 140, no, it missed it, 139.60. So it went to a peak D yesterday, last peak D on the 27th of August. So a very sharp pullback from the 130 area down to 100. This one ran all the way up to just under 140 and it's pulled back. But the high that was made, well, you could call it almost a potential double top, but it's only in leg C. And the technicals, MACD needs to turn positive. It's unchanged right now. So this is a work in progress. But in the meantime, not bad action for NVIDIA, having plummeted from the 140 level down to the 90s and then coming back so strongly. All right, let's go on. Let's do this again. So the Dow right now is down 272. United Health, as I said, was down really sharply, down 55 at 550. That is quite a hit. Now, what's interesting, let's see if GEHC, which is in the healthcare as well. Healthcare, it's down a little bit, down 44 cents today. And we have one called Solventum. Yeah, this is doing very nicely. This is just down 19 cents at 69.19. Yeah, so we were along this, but I just wanted to see how it was performing. So they're all doing different things. And then my point was, they're saying NVIDIA is doing fabulously, and Microsoft is up $1.21 at 420.41. But look, it's kind of been stuck, hasn't broken down, hasn't broken up, but it's held very well considering it's coming off a little double top in the 440 area, held the 409 level with the 200-period moving averages. So we got to watch this. This is a very mixed market. Now I want you to do this. I want you to go to the SMHs, semiconductors. Semiconductors right now are down $1.84 at 259.44, having made a leg D, maybe a peak D. So the big question for me is, are we seeing some kind of a top right now? Some kind of this week, are we going to see some kind of a move that says you're rotating through the different sectors, number one. Number two, sectors that were very weak or stocks that were very weak have come on quite nicely. I mean, even Walgreens had a big move up. This is a stock that was once Just the most recent, back in the 2021 area, was ERA. It was down. It was up in the 50s, and then it plummets down to the single digits. Had a big pop today to 10.38. I don't know, was that a restructuring or something? Whatever it is, but that's what I'm saying. That this is a very mixed market where stocks that were doing very poorly can manage a sudden sharp rally. Okay, let's go to the QQQ. QQQ right now is down 40 cents at 497, holding very well considering the all-time high was 503.32, and yesterday it was up in the 497 area, and today 498 maybe, and today it's is that high? Yeah, let me just check that out. Look, yesterday, okay, 494.39, 494.47, 459. Yes, that's a peak E. This is an alternate count. Let's call it an F for now, but an F/C, because all the technicals are still good. No reason why it should be a top. All right, watching it very closely. That's the QQQ doing very nicely. Leg C in the weekly chart. It should still go higher. That's just the way it is. All the technicals are very good. Let's go on to IWM. IWM now has it pulled back. No, it's actually increased. Now it's, very nice. This is at 223.96. So the reason why we added to our long position, kind of an aggressive position we took, is because that candle that we saw 3 sessions ago, that was on Friday. On Friday. Saw the 9-period moving average cross positive. The MACD was about to turn up. It did. The stochastic is still weak at 70%, needs to get to 80%. On-balance volume was very good. But it said that this cup formation, that they said that there should be a test of the 224.95 area based on this cup formation that I had drawn in. We are close to seeing that, but the day's young. We can still, anything can happen. It could pull back, or it could remain a leader for the day, that is. So I like it. It's the small caps. We haven't seen that. I haven't looked at the EWB for a little while. The EWB, IWB, which is the Russell, here we go, trading at 320.25, down 12 cents. This is the Russell 1000. So the 2000 was the laggard because it had small caps, and the small caps, you had the financials, that's the regional banks, you had the oil service, you had a whole bunch there that were just not doing well. So we'll see if this is improving. Most importantly, let me just notate this, so that plus sign goes to an up arrow. That's the way it works. You've got to go back and adjust for any changes that were made. But I need, of course, to test to see, that doesn't matter if it was a double bottom. So that's A, B, C. Wow, isn't that interesting? Look, this is the 1000. So A, B, C. It could almost be a C1, C2, but I won't do that. I'm going to say that's a D, and that's an E, and it could be an alternate count. Look at that. Leg C, all-time high. You don't usually fail at a leg C, an all-time high. The Russell 1000 says that we should still go higher. It's acting really well. It's at almost an all-time high. Very good. I want to also let's go to IWC, which is the minis. These are micro caps. Actually down just 2 cents today. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Basil, Chapman, Technicians Hour. Dow is now down $1.66. It is coming back off the huge slide. We're looking at the iShares Microcap ETF. Made a triple top back in 2021 through 2021. Lower highs, gets to about 100, almost 160, and then it can't make it. So it's called the Chapman Wave C1, C2, C3, acts like a D, and then it plummets down to the most recent low at about, the low that was made, I think it was October of 23, was at 90.70. So let me just type that in here, 90.70. And this is going to be very interesting because 90.70, so the IWM is acting pretty well right now. That's the small caps. The micro caps had a chart pattern very much like the IWM, the Russell 2000. These are the micro cap ETFs, and then look at this. It made a peak C in the monthly chart. 90 is over. 9 moving average is good. MACD is good. Stochastics at 84%, which is good. So this should start to move higher. And most importantly, what we're looking at is, let me just do this if you don't mind. Yeah. What we're looking at is within the context of this peak here. I've got it as a B and going to a C in the weekly chart. But technically, that sharp pullback, because it didn't take out the low of April and 110 area, this is, now you've got an overlapping wave. You've got a peak A in the Chapman wave methodology, a gray A and a gray B. If the price over the next 2 weeks or so goes over 127.26, that'll become a gray, that'll become a blue C, and then maybe you can get an overlapping wave. But you better hold 121 to 119 support in October, because otherwise it'll be a really poor action. Let's continue to the daily. The daily has this potential cup formation. It's all within a rectangle. Let me just add this right here. So this is a work in progress. And all I can say is, if perchance you can see a move as it's holding right now, just down 2 cents, and the general market starting to weaken, if you can see over the next 2-3 days, the IWC That is the iShares Microcap ETF, trading 124.95 right now. If instead of slipping down to 123.10 or 123.90, it can actually move to the 125.40 area, that'll be very good action. So, okay, as we're looking at that, I needed to go to high-grade copper. High-grade copper right now is trading down 4 cents at 4.36. Not acting all that well. I want you to go to crude oil. Crude oil is down very sharply, down 3.31. Once again, that inside track repellent zone, look at that. It just works every time. It's amazing until we break to the upside. I love doing that. It's just a very simple technique that I use, and we will see what happens in the crude oil. Most importantly, I want you to go to the bonds, because the bonds are up. Now they're up $1 and 6/32. Now this is very interesting, because there was a pattern that we look at. It's an inverted Chapman wave falling exclamation. And what happened is it broke from an up channel, came down, went below the 200 period moving average. But if you look at the TLT, look at the symmetry. It had the symmetry of that 99.94 high that was made back in, I think it was early August. Then it goes high. It goes to 101.64. Let me just type that in, 101.64. Comes tumbling down. And where does it go to? It goes to the most recent low yesterday of above the low that was made the 24th of July, which is 91.47. What does it do? It goes to 92.98. And today it's having a really strong bounce. Is it just a bounce? Well, this is what I like to look at. Within the context of left side, right side price time match, I chose that as the midpoint, and it took longer to move down, but it still didn't come down to that particular level. And that just says, look at the technicals. The MACD, the distance between the 9 and 14 period moving average, that's the 9 period differential, and not the 14, it's the 26 period exponential moving average, is really big. And the histogram, the vertical lines that judge and tell you what the distance is between those two lines, is just starting to improve a little bit, but only a little bit. The stochastic is at 10%. It was in single digits. That's really poor action. The on-balance volume is very poor. At this particular point, you have to consider this is an overbought spike to the upside. And if you look at the in leg B to the downside, could be a trough B today. If you look to the, oops, where did I type that? There it is. It went right to the TBT, which is the inversion, which is the ultra-short Lehman 20-year Treasury bond ETF, went right to the 200-period moving average. Every time it's gotten there, it's been repelled from that level. It's pushed down. Once again, it got pushed down. It was a peak B. Once it was a peak C back in June, I think it was. But in July, it went to a peak B, then failed. Went to a peak B and failed. Dreaded H patterns. This is a really big move to the upside. So I'm looking at this and say the 9-period moving average is still strongly over the 14. So that's a good sign, which is negative in the sense that it's saying that the weight of evidence is pointing to further upside action. The MACD is very strong. The relative strength did pull back, but it's still pretty good. And if you look at the stochastic, it's at 89%. That's very bullish in the on-balance volume. So this I have to treat as an oversold bounce in the TLT and just a breather in the TLT, and we'll see if that's in the TBT. But most importantly, it was extremely oversold, and that's a good reason for a bounce, good timing for the bounce. And you can see in the arch formation in the TBT, it went exactly to the midpoint, took the same number of bars to the upside, to the downside, then bounced, and it went lower, and then it spiked higher, and he has its own inside track repellent zone. So we're going to be watching this closely. I'd like to see yields come down a little bit. The market kind of needs it in a way. And I want you to go to the dollar. Look at the dollar. Gosh, I've got so many things to do, and here I'm babbling away at different things. So the dollar hit the 200 period moving average. Remember, that was my target if we went to 103.20, and that 103.36 area becomes a kind of a magnet that even if the dollar pulls back a little bit, it's going to try, unless it breaks away sharply, it's going to keep trying to come back to 103.36. That means the euro, EUR, USD was trading down at its 200 period moving average, struggling. The USD JPY, which usually trades in the direction, that's the yen, in the direction of the dollar, has gone to peak B, peak C, and here it is at very quick C to D, right on the 200 period moving average. So you can see how those 200 period moving average is really like a magnet. I'm hearing music very faint. Yep, there's the music. Basil Chapman, Tiger Conditions Hour. Here it comes. Dow is down 176. S&P is down 2.42. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Yeah, so look at this. Remember, long rectangle formation. Keep going for much longer than your patience. But what happens when it's at a high or a recent high, whatever that high is, and whatever you're trading, once that breaks down from the rectangle formation, be careful because it goes under it, and then it could pop back to the upside. And then if it takes out that rectangle, the baseline support, watch out. Well, we watched out and went to a peak D in the Chapman wave. That's where you've got to be careful, and hit the 58.96 200-period exponential moving average in the 10-minute chart. Just talking chart patterns here. Now let's get back to our story. So there are a bunch of questions came in. So let me just do this. So this is the euro. This is the yen. I'm sorry. This is the yen. It's going to a peak D, or maybe a leg D. Maybe it's a peak D today, but it is running very nicely. So just wanted to mention that. Now, to the questions. First of all, yes. So the reason why we are still long the IAI, which is this is the ETF. Let me just move that up. An ETF for the broker-dealer and security ETF, all-time high today at 136.98. I have not really been looking at seeing round numbers here, so that was important. Remember, we are long hood. We are long the from the low of 2020. We're still long at 45 the IAI, but we had added the just recently we added the hood, which is Robinhood. Went to a higher high today and is pulling back a bit. So at D, you can expect a little bit of a breather. Most importantly, within the context of this, what I call internal rotation within sectors, you've got a Schwab finally having a decent move to the upside. Look at that big gap to the upside, up 4.19 at 72.02. And that was just lagging. They must have come out with really good earnings today. So that's what I'm talking about, this rotation. And it seems to me we're kind of getting toppy here. I'm getting a little cautious, even though we're long, even though we've actually added to long positions, have no shorts at this time. Just because of the focus, I want you to see this completed. A lot of D's, E's, and F's and alternate counts in the daily charts. So I'm watching this very closely. So let me get to, I'll have to skip some of the stuff I wrote down. I'll just do this quickly. FXI right now had a really sharp peak D pullback in the weekly chart and the daily chart. Let me just update this here. This is the iShares Large Cap ETF. Went to a peak D doji, and then it pulled back. And I think I spoke about this yesterday because so many charts have done this. Had a D and then pulled back very sharply, went sideways, and it looked like that sideways pattern could break to the downside. That's one. Yes, FXI. In a completely different sector, look at Tesla. Tesla went to a peak D, pulled back, went sideways, exactly the same pattern, then gapped down again, and down. Now it's at 219, having for the last, not today, but the previous 2 days, tested the 214 200-period exponential moving average. Oh my, I didn't write it down. I had 2 or 3 others exactly like that. All right, not the point. The point that I'm making right now is that you just got to be real careful. The upside has potential, but it's becoming very, very selective. I don't want to, not that I'm superstitious, but I do believe if you start to project things that are not factually there, but in your imagination. So I'm going to step away from what I was going to do. But what I am going to do is to say, look, here's Bitcoin. Bitcoin is up 710 at 66,850. So I ain't spoken about this before, and I said I've had a sell signal since the April or March high that was made in the 75,000s, and I said lower lows and lower highs until we start to see a fulcrum made where the left side, lower lows and lower highs, suddenly turns to higher highs and higher lows. And I think it was happening that I thought sometime in mid-October, maybe later October, you should see Bitcoin start to move to the upside. I think that might be happening right now. Why? Look at this weekly chart. You see this Chapman wave inside track repellent zone. Look how many times it got there. I mean, for, what is this? For ever since March, every time the weekly chart went into this inside track repellent zone, it got repelled. The big question is, now it's touching once again the green line, the outer perimeter of the inside track. And now we're going to see by Friday. Does this break to the upside? Look at the L. The first time we've got an L in quite a while, in quite a few weeks, for the 9-period moving average on a weekly basis to cross positive. The week is young. We're not even halfway into the week. So we have to wait for Friday at 4. But look, the MACD, see the histogram, that's what I was talking about, the TLT. There's a big difference. Look, this histogram moving up like that, about to cross positive, that's really important. And that's going to give a boost for the first time since it crossed negative way back in April, that the MACD in the weekly chart is going to cross positive. And the stochastic has been improving, as has the on-balance volume. So this is the first time that I can say there's a chance that this is the move that could possibly start a move in the Bitcoin futures continuous contract to make the cup and handle, let me draw it in, the handle pattern forming right now. And what needs to be seen on a weekly basis, you can't just look at this as if it's a one-time thing. It has to be an evolutionary process, a work in progress, that is. And that says if the, I think this time I'm going to say if it closes, not just if it hits that. If 69,000 is tagged and then held, and we hold above this trend line of 68,000, let's call it, if there is a close above 68,500 this week on Friday at 4 o'clock, can't just go there, it's going to close above that level. That will be the first time that I can say we can project to the high that was made the week of the 2nd of August of 71,595. That means that at trading at 66,380 right now, I would put it right in the halfway mark of this candle right here. 64,500 is the key support to hold. Look at that. The S&P is just down 24. Wow. That was quite a turn. I've got to go back here. Let me just finish these up because I want to look at this to say, is this a potential short-term top? I was looking at it. I said to subscribers to open a call, got to be just a little careful here. If there's a breather, how does the market react by this coming Friday? Actually, Thursday is the day, but I'd even say Friday. It's really important. All right, let's go on now. Our next question came in. Costco's trading up 8 at 897. That's very good. So, this is the pattern that I need to talk about. This is what I call handle and cup formation. So that's very important. Costco trading at 898 with the 9-period moving average so far positive for days here. I'll be right back. How's up?
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, so look at that, almost like a halfway point to the 200-period exponential moving average, now trying to form some kind of a base in the EMA. All right, let's get back to our story. So this is good. Shouldn't was there? Nothing, not even a big bounce. That's amazing. All right, so here we go. Excuse me. So natural gas, I just needed to finish this up. Natural gas couldn't get to the 200-period exponential moving average. It's now pulling back very sharply. This particular pattern suggests that there could be a bounce in natural gas. Maybe 260 is trading at 250 right now, up just a fraction. But the weight of evidence is suggesting that it might have to still make lower lows, but the 2.40 area is really the key support. If at any stage it can close for 2 out of 3 sessions, it's got to have the moment. It's got to have that follow through. You can't just do it once. 2 out of 3 sessions above 2.65. I'm going to give it all week, the whole week. If I can do that, that's going to be really important, because that says, okay, didn't go to the left side low. The weekly chart, technicals are just improving a little bit. Maybe it can hold it. And look, winter's coming, so you should see it, but there's no guarantee, because this just, I don't know what it is, but natural gas has been in a major downtrend since it was up in the 13 or 12 area back in 2022, 23. So, okay. Now, next question came in. I did that. Oh, Costco. Costco is trading up sharply, up 664. Now, one of the things that I'm looking at is this particular pattern. Even though it made a higher high, the pattern itself has, right here, it has a particular formation that I had studied years ago. I did a whole bunch of work on this pattern that has a largish left side cup, and eventually it turns into a potential much larger cup. So it's like a handle and cup, not a cup and handle formation. Usually that's kind of negative, because what happens, it goes there, goes back close to the previous top, tries to make another cup formation, little mini cups, and now it's got a real cup and handle, and then everything fails. All I can say is that I'm calling this I don't see why I shouldn't. I'm calling this an E, peak E, back in July, August, for the weekly chart. And then this is peak A, peak B, but only a fractionally higher peak B. So this is an A. This can all change, but at this point, I don't see any reason why I need to make any changes there. Weekly chart is still positive. I'm looking at it and saying, I don't think it's going to go much higher. It's at 896 right now. Just on the very short term, I think it's going to have a lot of trouble trying to cross this double top high that was made on the 9th of October and the 10th. That's at round number 910.00. Next day it went to 910.00, double round number high. I can't see it going much higher than, or maybe it'll go fractionally. I don't think it's going all the way back to 920, not in this particular move right now. And that says that this could turn out to be a stalling formation. And then I'm going to have to say, well, that must have been F, that must have been A, B, C, this is D and E. I don't see that right now. This is a few times where the wave count can legitimately have two viable alternative counts. And I don't want to go there right now. I don't have to, because the daily chart's the key. So the question about what do I see in Costco? I see that if Costco takes out in October, this low right here closes under it, but not just closes under 867.16, closes, I'd say, into that gap right there. Yeah, I'm going to make it right there. 865. At any point in October, first week of November, if Costco closes under 865, that's a serious thing. I'm just giving you the worst case scenario. The best case scenario is that for some reason there's a rally that takes it nicely above this round number double top, 910, and it can actually hold on a weekly basis, it can close at 915. Then I'm going to say it's going to make a modest leg C, pullback, and then a D, and then we've got to be careful. It's already D in the monthly chart. Next question came in. Could I look at, of course I wrote, yeah, just a very good point in the Dan Z talking about hospitals are doing well, but the health really basically the insurers are not doing that well. And it is fascinating. I think I have to go back to this just for a moment to say, I don't want to jinx it, but I need to talk about it. So there's this company, a spin-off of Triple M, is called Solventum Core Healthcare spin-off from Triple M. We've been long since way back. It's done really well, and then we took profits on just the small parts of the position. Then we added back the other day. And I'm looking at this and I'm saying, that's what I mean when I'm talking about in a particular sector. You got some that are participating very nicely to the upside and some that are just independently not able to hold gains. And really, this is the issue. And this cup formation says there's a limit to the upside, but that's not the point. It's at 70.27. The high that was made is 73.40 about a month ago. I'm looking for a D in the weekly chart, and the D would be 73.41. And then we're going to have to take off even more, but of the trading position. So that's really what I'm looking at. And the 200-period moving average is 65. So I know the parameters to monitor. Okay, next thing I want to look at is, whoops, where was it? I wrote them all down. Yeah, so the question about Goldman, someone bought Goldman a day ago or so, and a fantastic move to the upside. It did 540.51. Now, I can count it in other ways. At this point, I'm still going to call this a leg C. And one of the reasons is, within the context of Goldman, my contention is that when all-time highs are made, and the market does have a really, not a major, I'm not yet looking for a major decline, but a pretty serious decline. Goldman will still be there at a high and then it'll come down. So I think that I don't know where you got in, because you might just be in a position where you've only got a small gain. But I'm just going to say take a little bit off. But when I get back, I'll do a real quick run on that, on Goldman Sachs. But I just want to see, am I missing? Oh, Apple. Apple, as we're going to the break, Apple's up 4. Yeah, you see what I mean about this? Oh, there's the stork leg formation. I have to talk about that. I'll be back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So this is, I discussed this, and at the time I said, I'm not going to write it in because those who know the pattern know it very well. Let's just see how it works out. So for Apple, you've got your leg, you've got your body, you've got your neck, and the beak should come in at some point whenever it comes in. That's the beak that goes back into the body, and we'll see if it takes out the left side low. So this is the exact pattern that we were looking at, and I said there should be a pop. I'll call it an E when it gets there, but it could actually recycle and go higher. So yes, Apple is an all-time high. You see, that's what I'm saying. You've got to. This is a very select market. And you've got to be very careful. So let me just, so I think I've got through every single one of the questions. I did that. I might have forgotten that. I didn't do that. I can do it tomorrow. I did that. Oh, well, I can't even read my handwriting there. Oh, that's right. I did. Oh, Nike. Nikkei. Not Nike, but Nikkei. So the Nikkei trading at a nice balanced PD. All right, I don't want to get into that. Let me just do this real quickly. Before we wrap up, Dow's down 126. It's coming back. I suspect that there was a delayed move in the S&P to pull back. There is still residual buying, and that just says to me that even in the Goldman Sachs, now it's down 83 cents. I suspect that somehow or other over the next week or so, it should still go to a leg D. That's the way I'm looking at it. But certainly if it goes under 518, that's a problem. But I just think that this is a reaction to a reaction. Oh, you remember markets hate uncertainty. No. They always see uncertainty. My expression is markets hate uncertainty about uncertainty. I think we're just about to wrap up. I can't tell because it's a little fuzzy. There it is. Have a great day. I'll be back with Jacob or Tom this afternoon. And so far, I still see this as going higher. A little bit of a consolidation today, and we'll see what happens. But in the meantime, I'm going to say have a great session. See you a little later. Check out my opening for my daily newsletter. We've had some really good positions. Yes, we've got taken out.